it's 3 agencies of government when I get there that are gone. Commerce, education, and the, what's the third one there? Let's see. Oh, 5. Okay. So commerce, education, and the
EPA?
EPA. There you go.
Yeah, well, that's about as much firmness and certainty as I feel about the market right now. So in spite of that, the show must go on, so I gotta say something. This is the only chart, and I hate to keep harping on this because it's the only one I feel kind of comfortable with. This is the only chart in the entire universe of charts I follow that is providing any meaningful clarity. It is, of course, the euro dollar, and we've got a nice head and shoulders pattern here, and provided that something, and you just never know, something doesn't push it way above this line, then we should be in good shape. But you never know what's around the corner. I mean, even yesterday morning when I was kind of excited about the drop in the market, I cautioned all of us, me in particular, not to get too excited because it's a market that should be viewed with a fair amount of skepticism. But this is a pretty clean pattern. It's a pretty clean pattern. What could well happen is if we vault back into this range again, we're just back into this mush. Total no man's land, shrugging shoulders, Scarecrow and Wizard of Oz pointing both directions. It's just like, I don't know. But until and unless that happens, we can rely on this as our buddy. As much of a kick as yesterday was, it's always kind of a downer to have the bulls fight back on a day like this. Although it wasn't too hardy of a fight. I mean, the Nasdaq was basically unchanged. Looking at the ES, we opened pretty much at the day's high. The news from Europe had pushed it up. It was up like 18 points or something like that. And I was long one thing, the spiders, and I'm glad for that because I made some money on that. And I sold those real close to the open because they'd kind of done their job. And at today's close, I bought them again with less certainty this time. Last night, I felt that the spiders would probably stand a decent chance of being useful to me, and they were. Today, it's more of a pure insurance play. My faith in them being useful is a lot less, but it's good to have in my back pocket. Let's back this chart up some. I've not as heavily committed as I was this morning. Interestingly, I had I had exactly 119 shorts when the day opened, and the market opened real strong, and I got stopped out of 2. Let's jump into a few index charts here. Just about the only one I can find where you could make a pretty respectable bullish argument is this one. This is the NASDAQ Composite. The reason I say that is because we had a very large range here that we've escaped, and the market has sunk down to the top of that range. That could provide the launching off point to a move higher, like here. And I've not much more to say about it. I mean, essentially, if tomorrow's weak and we get back into this range, that is good news for the equity bears. If today's low is pretty much the lowest we're going to see tomorrow, then we've got some room to run. Since I only have a single long with Spider, that wouldn't be great for me, but that's how it's positioned. Commodities, this is lies. This is Charlotte Home Price Index. I've asked them to change it, but it's off the data feed. The commodity index looks terribly vulnerable. What's weird, though, is that crude oil just keeps thrusting itself higher. We have, since October 4, moved from 75 to nearly 100. That 33% increase in crude oil, that's a pretty big tax on the economy. really, really remarkable. But from a technical standpoint, right up against what I consider a very significant and useful trend line. Gold's still a big question mark. The world of precious metals is still a big question mark. The tired old analog still very much intact here. We were down a bit today on this, and I think that we've got to see sustained weakness in the miners in order to enjoy some more drop in the world of equities in general. These were relatively weak today, which is kind of encouraging, particularly in the face of a relatively strong euro. But at this point, everything emanates from what the euro does. Crude oil seems to be the only kind of ultimo hombre. He just does his own thing. But everything else seems completely depend on the news from the Eurozone. As we look at the Russell 2000, this was the strongest of the indexes I followed today, which is no surprise because it was the weakest yesterday. It got beat up really badly. I still like the size and the form of this topping pattern, but we are, and we had really retraced nicely to it, and we've been falling away from that. But, now is the time. If we keep diddling around and monkeying around and just kind of hanging around here, it's just going to drive bulls and bears like nuts. Yesterday, Wednesday, hopefully was the start of something better. And if it is, it sure better resume Friday. Otherwise, we're still stuck in the muck. I'm going to wrap this up pretty soon because there's not an abundantly more amount to say. As far as bonds go, we're really counting on this to push above this level if we want to see things go the way that equity bears would like to see them go. This is not a particularly bullish-looking chart, so this could resume its weakness. It's been trapped in a pretty tight trading range for a couple of months now, but this needs to resolve. And the resolution would be a strong down day for equities on Friday and a burst above this level on bonds at the same time. Otherwise, that kind of cloudy scuba dive picture I showed you is going to be exactly the state of affairs. We'll wrap up with the E-minis here. Here's the NQ. We've got, I haven't drawn it, but it's not a bad diamond pattern going on around here. I hate to say it again, but we got to break beneath the lows of the third, particularly 2279, for this to start getting interesting again. As far as the ES goes, we are smack dab in the middle of this trading range between 1208 and 1290 or so. We're right in the middle of that thicket right there. And there's nothing to tell me whether we're going to go up or down or sideways tomorrow. I mean, it's unlike the euro, which has provided us some sense of direction. This is just a big fat question mark. I would also add that tomorrow is not a stock market holiday, but it is Veterans Day. I think it's a bond market holiday, and that should thin out trading to some degree. So it might be on the quiet side. It's also very devoid of any market moving news, save for the fact that Europe could stir up the waters. So this is probably one of the most lackadaisical videos I've ever done, but I didn't really have much else to say. And I've spent 10 minutes saying it, so that'll be it for me. I will see you on Friday morning. Good night.